Hi there, this is Chris from MoneyHub, and thanks very much for watching this video. Today we're going to look at Moola. Moola is known as a payday lender. That's pretty much what its business is. So it'll be lending amounts around about $500 maximum for short periods of time, 1 week, 2 weeks, 12 weeks, that kind of thing. What this video is going to look at is going to look at the fees involved, what the interest rates are, the pros and cons, what to watch out for with Moola specifically, but we'll also just kind of give some information, some commentary around it so that you know if you are going to be applying for a loan with Moola, you know exactly what the risks are and what you're doing, because a lot of this stuff isn't actually that clear, and that's not the fault of Moola, it's just the fact there's a lot to cover, and we thought that a video beyond this review that we've done would be the best way to present it. So without further ado, let's just go straight into it. Moola, they are a payday lender, which is what I said. They are 100% online, so the process on their website really is just to get you to apply. That's what they do. They're not really a sit down and chat type of provider. That's not their business. So it says 100% online. You can apply within 5 minutes and same day payouts. This is what a payday lender is, and you think, well, that sounds great. What's the catch? The catch is the interest rates are very, very high. So while it does say, and just on their website, that if you go down into the fine print, you will find that beyond this example here, it's what is the interest rate, and it will say that there's a maximum cap of 100%. So that's all very well, and that makes sense. So if you borrowed $1,000, the maximum you could pay back is $2,000. The issue also is that the typical interest rate turns out to be around 292%. So they don't expect people to take out a Moola loan for say 1 year and maximize that period. They expect people to take them out for 2, 3, 4, 5, 6 weeks, that kind of thing, up to 12 weeks, and that will be the interest rate which is generally applied. So this is really, really sort of important to know. You can see that they focus on small loans between 56 days, being 8 weeks there, and 91 days. And then what they have, and what I've put in the review, we're just going to look at their fees. So there's no establishment fee. They make that pretty clear. They just want you to be able to draw down on the loan, so they're not going to charge you an upfront fee, and there's no debit card fee if you pay on debit card, but there are fees if you don't repay, and this is where they start to add up. So the default fee, should you not make a payment, there's a $20 one-off charge there, and then the same with the wage deduction fee. And this is if you haven't been able to pay and they need to take your money through your employer or through your wages, then there's a setup fee for that as well. So that really does make it clear around what fees there are. Moola isn't heavy on the fees, but of course the interest rate, you would argue 0.8% per day, when perhaps the average credit card is around 20-25%. This is at least 10 times the interest rate of that, so 10 times the cost of the debt. What I've said in this review is you really need to have a think about whether or not you do this, because whilst it does sound cheap if you do a $300 loan and it costs you $400 to repay, so it's only $100 the total cost. There is a risk that you fall into a trap, not just with Moola but with any of these payday lenders or short-term financing solutions, that you're going to have to keep on borrowing and then keep on repaying, and it's a never-ending cycle. So we've just talked about some of the loans here, and what they do, how they pay it out, and what you really need to sort of worry about is the repaying of it. So you can choose your repayments, and then if you're going to do this weekly, then you just need to make sure that you've set enough money aside for the loan. They do let you make early repayments free of charge. So if you've got $300 outstanding and you want to pay that off, then you'll be able to do that without penalty. And then of course that will save you on interest. So what is our view on payday lenders? We're not obviously huge fans of them, and we don't link to any payday lender like on our guides just because we don't want to do that. It's our principle, it's our policy. But at the same time, we are very familiar with the fact that people use them. We see a lot of traffic on our guide, like on our site for payday loans, because we have a lot of guides to them. So yeah, just as a background, if you do want to go ahead, please think very, very carefully. Please don't rush into it, because of course, once you're in it, you may need one later, and it's a never-ending sort of debt treadmill. You do need to be over 18 because they are a credit contract. You can't be bankrupt. You have to, be receiving the income, and you need to be able to have a bank account that you can get the money sent to, as well as being fully sort of connected and like invisible. And you need to provide quite a lot of information to be able to get it. So whilst the process is 100% online, they need to assess, whether or not they'll lend to you. They're going to do that by looking at a few of your expenses and a few personal details. So then if you want to consider alternatives, these are popular on our core payday loans guide, just because, not always rushing into a payday loan. It does sound easy, but that's not always the best option. So first option is, have you considered like a credit card, a cash withdrawal, or just using a credit card? Probably you have, but it's just good to point that out, just to sort of remind people that that is an option. It's much cheaper. Even if you would just withdraw the money, you'll be paying 2% per a year, 2% per month on it, not 0.8% per day, and there's no fees for doing so. Maybe a small cash advance fee. You'll just pay the interest rate, as I said. So you can also talk about raising your credit card limit. Some banks just now, because of CFA, will require a whole bunch of forms, a whole bunch of documents. But it is something that you may want to consider should you foresee yourself having to take out a loan, in the future, like a payday loan. Balance transfers, we've got a whole bunch of guides to those and a whole bunch of tips there. So just moving debt to 0% or low interest credit card, that may be more desirable than taking off a loan straight away, just because many people do panic. They see their credit card charging interest, they think, oh no, I can't spend any more on it, what can I do? We would always suggest people balance transfer, or actually consider to balance transfer a credit card, just if they are approaching these debts, and then of course cut up the other card that you've transferred it off, and then work away, like any financial expert or financial journalist will tell you, really just work on paying off that debt. So not a priority right now, because of course if you're looking at Moola, you'll be looking at trying to get some money in the short term, but something just to know for future planning. Personal loans, they're also a lot cheaper than the likes of Moola and their competitors, so do consider those too as an option. We're certainly not suggesting taking on debt, but it's something. It's just going to be a lot lower interest here. Here we can see it's 292%. You may, at worst case, get a loan of 35%, but of course that is still infinitely cheaper than a personal loan. The only disadvantage there is that you will pay probably a loan fee to draw it down, whereas Moola and some other payday lenders don't charge that. But yeah, just worth being aware that if you are looking for some money and it's not $300, $400, $500 isn't going to be enough, then there's no point taking out a whole bunch of personal loans all over town with a whole bunch of lenders. Maybe look at that larger balance and with a trusted lender that you can actually repay and have a longer set period to do so. So usually personal loans are 6 months to 5 years repayments, not sort of 12-week type of rolling thing like Moola is and other payday lenders. Finally, just two other options as alternatives to payday loans. Considering borrowing from family, not something that we really like to sort of talk about, but that's certainly something that you could do. Then also looking at your bank overdraft. So that's pretty much a summary. I mean, Moola it's not a very complicated system. It really is just about how can we get money to people very quickly, but also making sure that they repay it. So you'll be able to work out, if it's right for you just by looking through the site, comparing some of the prices that they're offering or some of the total cost of the loan. Make sure that when you do compare it to other options, that that those options also include all the fees. So you're comparing all the fees with Moola with, say, any other payday lender or anything like that. So sometimes fees are excluded. That's not great. The best approach is always to make sure that it's a fully complete cost of loan, looking at, say, the weekly repayments and the total fees that you'll pay and the total interest that you'll pay for the term of it. So that'll just help you make a better decision. So yeah, personal loans and specifically payday loans, not a whole bunch of fun. It's something that we really suggest people don't rush into. They take it very, very carefully. But at the same time, we have to be objective and know that people do use them. So tread carefully. Wishing you the best of luck for this. If you have any questions about Moola or payday loans in general, please leave them down below in the comments. We're very responsive to those. And we wish you the best in whatever you decide to do. Thanks.